from a fundamental point of view, a couple reasons to be interested in silver and silver stocks. But you have to be, I would suggest, first of all, a speculator. The easy money will be made in silver and the silver stocks.
I definitely want to own gold, and you can add in on occasion silver and platinum in there too. But that has to be when the level of real interest rates is falling. So if nominal rates have topped out, and I think we're no longer in a sharp deflationary environment, that's the time you want to really lever up on gold. Take it all the way to 20% in the portfolio.
The only central bank short gold, which is, yep, that's the Fed, forced to revalue gold, which a consensus of first-tier liquidity providers suggests at latest after we enter the physically driven 2024 marketplace. As I say, not very far away. Now, the only gold and silver traders not seeing this gold revaluation play are the siloed COMEX speculators that by the end of the fourth quarter, yes, just 35 trading days away from when this episode is published, so little physical gold will be left to underpin this rehypothecation scam, it'll lead to an inevitable central bank-driven gold price revaluation.
In today's episode, multiple financial experts give his gold and silver price predictions for 2024 and share his insights and experiences with the world of commodities as a major catalyst event is around the corner. The Federal Reserve is set to be audited by the BRICS nations in an event that could trigger massive revaluations of gold and silver prices, kickstarting a major bull run in precious metals. If you're into commodities, this video is for you. Watch the video to the end, hit the like button, and subscribe to the channel as everything helps with the algorithm. And don't forget to check our pinned comment for the best crypto deals in the industry. Let's get into the video.
Well, so there is no commodity sector in the mind of Pento portfolio strategies. There's precious metals, and there's base metals and energy. So there's two different categories. I wouldn't conflate the two. So in a recession, depression, disinflation, deflationary environment, you would get out of base metals and energy. You'd be short those things. They always get destroyed. When the R squared, the correlation goes to 1 in that environment. However, gold is money. It's a currency, and it has a different volatility dynamics than, say, copper or oil.
Yep.
So I separate the two. I definitely want to own gold, and you can add in on occasion silver and platinum in there too. But that has to be when the level of real interest rates is falling. So if nominal rates have topped out, and I think we're no longer in a sharp deflationary environment, that's the time you want to really lever up on gold. Take it all the way to 20% in the portfolio. I'm not there yet, but I plan on getting there. With the caveat though, and I alluded to this. So if you look at the direction of real interest rates are rising in a deflationary collapse of the economy. And that's why you see at times you'll see gold is just used as a liquidity asset. So you just dump it because you have to wait. What do you need? Everybody needs one thing. They need dollars. They need cash.
Yeah.
And so they dump everything they can. So outside of that, once nominal rates top out, gold is an excellent investment. And so I'm looking to increase that until we reach that liquidity event. And then on the other side of that liquidity event, that's when I think that's when I think gold is going to be going to all-time record highs. Because what you'll see then is you'll see a never-ending regime of interest rate repression. In other words, the only way that the U.S. government can maintain any semblance of solvency is to have the central bank print money to buy bonds, just like the Bank of Japan is doing, to keep nominal rates from rising. And when you have nominal rates capped and inflation is rising, what happens to real interest rates? Well, they plunge, which is the absolute sweet spot for physical gold and even the miners at that point. So
now, Rafi Farber will give you the main reasons why he's bullish the precious metals sector. He'll delve into why gold and silver are set for a massive bull run amidst the current market turbulence. Hit the subscribe button and let's get into the video.
Now, we have seen higher lows because we did hit a low here in late September of 2022, hit an intermediate low here, and from there we've been seeing higher lows. We've also been seeing lower highs, and that is classic triangular action. If we can pull above this recent high at just under $4 from July 2023, then we can establish a pattern of higher highs and higher lows, which would indicate a new intermediate rally is underway. We hit a low here and what looks to be a yearly cycle low. For those of you who are into cycles, I dabble in them sometimes. We've had a low here in September 2022, another one here, September, October 2023. That's a year, so it's a yearly cycle low. And if we're headed higher and we do confirm higher highs, here just below $4. So if we hit $4, yeah, we're in a new bull market for gold and silver mining stocks. And we had a downside surprise in consumer price inflation, but the embedded parts of the CPI are still very much elevated. We'll go into the owner's equivalent rent and meat, poultry, and fish, which are rising like crazy. People that I've been covering every week, those spare dollars in the reserve tank are fast running out. We're down to 944 billion. We've broken below $1 trillion. We won't go above $1 trillion until and unless the Fed pivots one last time, which it is on its way to doing in the next few months. And I believe it is 2 to 5 months out, depending on the rate that we've seen in reverse repo drainage these past few months. But personally, I believe that once those funds hit zero, the Fed will cut back down to zero immediately and restart quantitative easing. And from there, we will see gold and silver catapult to all-time highs on both gold and silver. And from there, the end game should be in sight.
To conclude the video, Alasdair MacLeod will share his insights and experiences with gold and silver. Watch the video to the end to get his price prediction for 2024, and remember to hit that subscribe button.
And the idea that that actually reflects supply and demand is totally wrong. It doesn't, because the supply and demand is basically bypassing the market. And instead, we've got a market which is a paper market. And a paper market is essentially an emotional market. And on the one side, you've got the bullion banks who understand the emotions in the market. And you have got hedge funds on the other side who are the emotions in the market, as it were. So, they are the speculators, while, the guys with their heads screwed on are the bullion banks. And I mean, it's just absolutely amazing. You can see they do this sort of pump and dump operation time after time after time. And it's been the way the whole system has worked, I think, for the last 20, 30 years. Having said that, from 2020, we rose from a low, or 2022, I think, round about then, a low of around about $250 to the current level, challenging $2,000. So, even though you've had this sort of continual pump and dump operation with hedge funds, I mean, continually losing money, why on earth they play this market? It defies logic. But anyway, they come back for more and more, rather like gamblers at the table. They always think that next time we're going to really clean up, but what happens? They fall for it again. The reason I say this is that I want to just impress on everybody that this market is actually not a real market. It is a speculator's market. And the underlying stuff, the hard stuff, the bullion, which we think it represents, actually doesn't go through the market.
In 2023, industrial silver demand is poised to reach a record high of 632 million ounces, marking an 8% increase, according to a forecast by Metals Focus in collaboration with the Silver Institute. This surge is propelled by investments in photovoltaics, power grid infrastructure, 5G networks, as well as growth in consumer electronics and rising vehicle production. Industrial demand, constituting over half of the annual silver demand, is forecasted to rise by 46% over the next decade, with a rapid 56% growth projected in the electronics industry. The major consumers of industrial silver are electronics and electrical applications manufacturers, consuming 67% of the industrial offtake in 2022. Despite a 10% expected slowdown in overall silver demand in 2023 due to declining silver jewelry and silverware demand, the Silver Institute projects a substantial physical deficit of 140 million ounces, marking the third consecutive deficit. While the price of silver, currently around $23 an ounce, is considered undervalued, its future potential is underscored by the shrinking supply coupled with rising demand and the Federal Reserve's challenges in curbing inflation. This situation, alongside the historically high investment demand, presents a compelling buying opportunity for silver at the $22 to $23 range. What do you think of today's episode? Are you ramping up gold in your portfolio, or are you still waiting? Post in the comment section down below the percentage of precious metals in your portfolio and your exit strategy, and send this video to someone who hates copper. Thanks for watching the video to the end. Please consider subscribing to the channel as everything helps with the algorithm, and I see you next time.